To start this off, ladies and gentlemen, perhaps I think rather than me introducing them, it's a better interaction model if we get the panelists themselves for 2 minutes to say who they are, what they believe in, and introduce themselves as well. With that, ladies and gentlemen, if you don't mind me, I'd like to call upon Farouk to start this session appropriately with all of us. Thank you, Farouk.
All right. Thank you, Halim. Assalamualaikum warahmatullahi wabarakatuh, and good afternoon, everybody. I know it's 2:30 in the afternoon. Hopefully, all of you are still awake. I mean, we had a bit of waving just now. I've been with the Labuan industry for about 20 years, involved in captive as well for almost 20 years. And also, I think initially when I look into captives, I started off with when there was no PCC in the first place, so it was on like a master rent a captive or subsidiary rent a captive. So when PCC laws come in, I think in 2010, so that's where people start to look into it. So I've been with the insurance manager, underwriting manager since 2002. Also with a reinsurance company. Right now I'm with an insurance company, principal officer of Acurra Insurance. So in that case also within our group, we also do support for our own group, PCC, Acurra PCC. And I've gone through also a lot of potential clients on all kinds of lines of business that I wanted to go to the captive. So I hope that by this afternoon's session that I would be able to share a bit on what my views are about PCC and how it can have certain advantages maybe with regards in comparison with the other kind of captives. Thank you.
Thank you, Farouk. Kiri, would you mind? Take a couple of minutes.
Hello, good afternoon, everyone. Okay, my name is Kiri. So my group known as Global Insurance Limited. Basically, we are captive owner in Labuan. My group name is called MBF Holding. So I think most of you guys heard about MBF card in those days. So my group is actually from that group. So we also known as a carpenters group based in Asia Pacific. So we actually operate in most of Asia Pacific countries, such as Fiji, Vanuatu, Papua New Guinea, Kiribati, and so on. So I here today will be sharing about our experience of our group in the captive. We are quite new in the market. I can say we are young like me. My group is quite young like me. So there's a lot of challenges that we faced in the third world countries and why we choose captive and how it help us as a group to sustain a proper insurance program for us. So that's what I will be sharing. That's it, a little bit of my group.
Thank you very much, Kiri. He made a couple of times mention it. The company is as young as he is. That's for us to judge. Having said that, before we go through this, the panel discussion was supposed to talk about this. You notice with Lee Warners and friends just now, they've also somewhat interjected into the PCC, but I think for us, we just want to take it back a step further. We're going to be discussing the fundamentals of the formation of captive, types of captives, PCC structures, the motivation and advantages, and the importance of captive processes and controls. Rather than deal with it one by one, the questions are targeted for this gentleman. You will realize Farouk represents solutioning, and Kiri then represents an operator who is already doing this stuff. So we'll get views from them, which will also include what then reforms and perhaps regulatory requirement can promote this further. Then perhaps from Farouk, from the point of view of solutioning, what else can we do? So you've heard captive option, now we bring it down to a PCC. Okay, with that, perhaps I'll just help this go along. For us, we wanted to look also at a little bit of introducing this to capture some of the motivation. I think you guys know this, it's been a while. It's been there for a while. And if you see in the green area, the solutions required for companies who want to take advantage of targeted risk management solutions. That's how it started. But you hear from Balian, you hear from Lawrence, and everybody else is now. There's a lot more to this. Beyond targeted risk management, you're also looking at protecting capital. You're also looking at finding the sweet spot and making it into a commercial venture. Okay, don't forget, this is a business. It's no charity home. Okay? and its current development given the daunting challenges. So we thought we'd take you from this perspective as well. The growth in cell captives in the current hard market has been encouraging. And in Labuan, not only has there been an increased volume, but you now get it being hosted in many other countries. So these are all positive for the PCCs. Of course, we will discuss, beyond the daunting economic situation, what really is the insurance market struggling with, and how this option can provide perhaps competitive pricing to some extent, or capacity. Again, we'll talk through this. These are just very quickly the renewed objectives from the point of view of a PCC. Cell captives are not only being used to fill capacity gap, but also for difficult to insure risk. Of course, we saw the pandemic. We now talk about cyber risk. Lee also mentioned in terms of directors and officers liability, all the big ticket tax pays and everything else that's going to come. And today, as we speak about black swans, we're now talking about red rhinos and all that. So these issues will come to play. Cell captives are demonstrating their flexibility. Perhaps that's the value we want to see by stepping into the gap left by the direct market. So the question whether we are partners or competitors, we'll talk through that as well a little bit afterwards. Then the future expectations. Simple, cells will continue to grow in terms of number of cells, and the creative uses of those cells will also expand to include perhaps unthought of risk and further innovations. Okay, that's it. So with that, what I'd like to do then is launch into the question so that we deal with this specifically and get the views from everyone else. So along the way, we're going to put up poll questions. And I do appreciate each and every one of you answering that poll question so that we can drive the motivation to look at where it will come further. So I think the team will do so, and then we'll look at the results together. Question number one. I would like the solutions guy to talk to us about this first, because it's fundamental and it's looking at stuff which I think is important to everybody. So in short, Farouk, maybe, why would a client look for a captive solution and subsequently PCC?
Okay, usually the clients that have approached us, they would probably have some kind of idea what captives are. Traditionally, like pure captives, single owner captives. But when they come to us, they are usually smaller type of enterprise, smaller companies, or even smaller partnerships, and who has some ideas, business ideas, actually, where the insurance would actually complement their business strategies. So when they look into the captive solutions on the part of risk management, I think it's more, their interest is more of how you can set up a captive solution for them in a faster way, in a smaller way, not with any large capitalization. And I think something that you can do your captive as any other company, how would a company do, but just that the structure is much more an easier setup. You actually do not really have to have a substance requirement in it, because you already go according to your core that provides the substance. But what's more important is to focus on their insurance program. So it's also a matter of the size of the premium that they're looking at, as what in the previous discussion that we're going through just now, when we said that about 1 million of gross premium USD. For example, in our solution, we could actually look into up to 250,000, for example, per year. That is, of course, we would have to see what's the actual insurance program they have, whether is it really an insurance program, because there are also people who comes over to us about insurance which doesn't look like an insurance, doesn't really has a insurable interest in there, but more like creating a fund, or fund for the membership program or something like that. So there's still some learning process from the people who have approached us for an insurance program. But I think basically, again, approaching us because of the simplicity inside it, even through, at the moment, I think the regulators also provide an exemption for approval in setting up the captive. So, of course, it's within, I think, by end of the year. So that's a what we call a faster way to set up. But the onus of to ensure that the program is in compliance with whatever regulations you have really falls upon the core owner of the PCC. So I think they would really also rely on the professionalism of the core or the insurance managers in providing what's right to go through the insurance, what's the underwriting concept they want to use, how's the claims going to be arranged, and they would usually, of course, just rely on the professionalism of the service providers. I think that's most of why they would approach us.
Mm-hmm. So you mentioned it's administratively convenient. It's not necessarily onerous as opposed to just a captive option. So the PCC then, is it specifically targeted to a specific band of potential clients or operators who's interested in that area? What then would motivate them?
Okay, it's not really specific band because you can have people coming from all kind of race type, and usually those are unconventional lines. I mean, you don't really have people who wanted to do their property and their fire business risk through the captive. It's probably something like, let's say, for example, like cyber risk or extended warranty, for example, right? Probably those risks that don't really go well with the insurance company directly, so this is something they want to do. But they can also, which they know that would have some reinsurance market to support it. So they just need like a what they call a base for it before you go to the wholesale market for support.
Thank you. Perhaps let's take it into a broader sense. So when I started in the insurance industry, as I grew up, then the word captive came along, captive option came along. It all sounds very sexy. But the sexy actually benefits bottom line, helps your P&L, retarget your risk management. So we have Kiri, who's an operator. So in that sense, Kiri, does captive solution in a bigger form or subsequently perhaps a PCC is a better choice for group premium savings or even a targeted risk management? Does it really show you these numbers stacks up to make it an important feature to consider?
Oh, okay, basically, before I start, I need to brief a little bit about our company history actually. So we actually operate in a third world country, so there's a lot of big issue that in third world country when you operate it. Some of the issue that we have is the local facility, fire facilities, firefighting facilities and so on. We had 5 major fire claims in the 10 years in PNG and Fiji. And our last fire claim, we actually suffered around 25 million USD loss. And just imagine, our warehouse was just opposite to the fire station, and it took 15 minutes for fire station to arrive and bring down the fire. So that's how hard was the facilities there. So my group actually decided to do captive. It's not because of we want to do a premium savings or we want to do a tax savings and so on. My group actually ventured into this program for one reason and one reason only, that is a risk management. After we had this big fire claim, and it became difficult for us to get a placement locally. The local capacity placement less. Most of our local insurer, declined to quote. And we actually approached a lot of reinsurance market before we start our captive. And we get to know that what we learn from that is that most of the reinsurers actually want us to be committed towards our insurance program before we can do it, before they take the risk. So that's the reason actually our captive come about. So our major was we actually form a captive in Labuan with help of Labuan Insurance Management. Mr. Wong was our advisor at that time. So he actually helped us a lot on that. And we came out with 5 major things that we feel that important for us. One is the risk management. One is we actually want to reduce our rates actually. Our rates actually went up 3 times more than what we should pay locally. And basically whenever we actually approach with all Fiji or Papua New Guinea risks, we always been combined together with Australia and New Zealand's claim ratio loss. So although the claim ratio loss generally for this Fiji market in Papua New Guinea is not high, but we always been classified under that particular group, and our premium rate even in the London market was 3 times higher than what we're supposed to pay, right? So that's the reason actually we came out with the 5 years risk management program. First year, we actually managed to place it with, we actually take a big chunk of our captive, our first layer. which is where we actually retain up to 3 million USD at our site. And we actually managed to save around, at this moment, 4 years in running, we actually managed to save around 10 million USD in terms of premium. And we actually used this money particularly to upgrade our facilities, basically, fire facilities. And we actually came out with a lot of new ideas to tackle our issue. Basically, even the power actually fluctuate frequently. So we actually placed some stuff during night to make sure that if there's a fire and so on being done. So we came out with the idea of doing a fireball. There's a one fireball equipment where we place it on the most of our electric board. So if there's a big fire happens in the electric board, we can obtain it or something like that, contain it. So this was why my group chose it, captive. So my answer will be is we did it for risk management, and it actually works for us in terms of risk control. And successfully now, we actually in the midst of setting up our own insurance company based in locally, which we feel the local capacity unable to do it. So we actually managed to convince all of our London market reinsurers, and so far so good. So we are coming for renewal for this November. So everything is good. So I will say captive, for the captive owner who want to invest in captive, you should look more than savings, will be more into a risk management. From you doing a risk management, you actually will get a lower premium rate. And from that, you actually can upgrade your facilities and so on. And it become a big challenges to do it actually, but you can do it.
Thank you, sounds exciting enough. We'll get back to that because the other questions that we worry about things like this is a question of, is the business funded heavily by a bank? If it is, how does the bank then or the financial institution look at collateralizing your policies or your potential critical losses through captive? Is that an acceptable norm? We'll get back to that one. Maybe at this stage, do you mind if you run the first poll question? And then we'll just see the acceptance to this idea. And this is not directed just into PCC, but we thought, you know, simple stuff like this, read it yourself and just give a quiet answer, and then we take you through afterwards. I appreciate if everyone then gets involved with it. Whilst we're looking at that, after Farouk answers this next question, I think what's interesting also to find out from the solutions point of view is, you know, as a client, then the expectation on their business with a self-captive setup, for example, versus the applicable rules and regulation that's available in Labuan. Does it make it more objective? So in your views, today, is the rules and regulation too strict enough, or it promotes this business? Is PCC the right environment out of Labuan?
Okay, when the clients went to set up the cell captive with us, I think one of the things they understood that it is a regulated environment. I think that also something that they want, you know, when they want to set up an insurance program and they want to give confidence to their client on their insurance program to the captive, the cell captives. Being regulated is, you know, something that they can understand, and, you know, it's something that they always want to know what are the regulations required. And also, for example, I mean, give an example, like they do understand that the captive also have to maintain a certain amount of solvency margin, you know, so they cannot just outrun the company without getting proper finance and all that. Even though that there's no really minimum capital required for cell captive, but you know, they still have to maintain a positive amount in their balance sheet. They also understand that in running the captives is that they have requirements for it to be audited. You know, it would also be subject to some risk management control, and they are also being supervised or being advised by their insurance managers or the accountants. A lot of them, when they go into the self-captive, they don't actually have their own people to do the captive. They're just interested to say that, you know, they have a certain business program, business proposition. They put aside some funds for the insurance, and then they would let the PCC managers to run their captive. So that is something that they understood about, and I think probably certain things that would affect their decision when it comes to these rulings is when there's some tax concern about it. Of course, tax wasn't the first concern they have when they set up the what they call it, the captive part. I mean, this morning when we talk about BPS, about let's say if the government start to impose a certain higher amount of tax, they would probably put that into consideration about whether they want to go through this going forward. It's also about how they can use this insurance program through the sub-captives on the longer term, because it depends on the sort of type of business they want to do. If it's a very short-term business that only runs 1 or 2 years, some of them are very ambitious about doing it, but I think setting up a captive really is a long-term program of risk management for the group.
So it's again, the focus is risk management, which is fantastic. Now let's look at the poll question. Whether you guys understand it better than your traditional market does. And I've seen the averages actually moved. And there's 37% that says, yes, you do. And that 52% say we may. So in short, perhaps there are modulation that can be looked at. And we like answers of this nature simply because then the potential for captive becomes a bit more real. Because 52% of the guys say, oh, we don't have all the relevant requirements, but we'd like to get there. So perhaps we'll move to the next question in the next 5 minutes. So at this stage, if I can go back to Kiri, one of the things that I have always been concerned about is collateralizing against a captive option. So in your views, what then would be the challenges faced by captive owners with local regulation? So in your case, it's where you operate, right? Maybe give your comments on how does the bank see it in the first instance if they are financing you?
Actually, when you operate in a third world country, the Reserve Bank actually go hard on you. Basically, they try to control their USD because their currency versus the USD with the biggest challenge for them. Just imagine for PNG, it took at least 8 months to 12 months to bring the premium from the particular country to Labuan, basically. The reason being is because of the USD that they need to. So they try to control a lot of it on that. Dealing with all this Reserve Bank, I can say in PNG, the word captive can't be used, actually. So you need to say in a different kind of word. But in Fiji, we've been having a quite successful with them, because our former bank governor, which is Madam Zeti, is the advisor for the Fiji Reserve Bank. I think quite long ago, she was the advisor there. So in terms of captive in Fiji, they accepted more, but you still need to make sure that you've been paid all the requirements tax. For us, we have a big challenge in terms of, in Fiji, we have a big challenge in terms of stamp duty, because the stamp duty cost is quite high. It will be a 15% from what you insured, basically. But because of captives, we actually the first one that did the captive in Fiji. So most of the company that is now trying to follow us, basically. So we've been given a privilege for 5 years where we don't need to pay any stamp duty. So we actually managed to save around 3 million to 4 million there in terms of stamp duty. But we still need to pay the non-holding resident tax, which was around 4.5%. For Papua New Guinea, it will be, we need to pay around 4.8 tax locally. And again, we can't use the word captive there. So you need to have a local fronting insurer to front it. It's similar to what Malaysia is doing, right? So you need to have a local fronting insurer here to front your policy. So it's same there. So we do that, and basically we will name it as a sort of a reinsurance, guys, with the Reserve Bank there, and make sure the money comes to the Labuan. That's the most challenges things that we face with the Reserve Bank there. And they frequently change their regulations and so on. But since we've been operating Labuan, the good thing about it is that most of these countries, third world countries, Papua New Guinea or Fiji, they recognize Labuan. So they are quite happy with the regulation that Labuan have set. So we actually did not have any big issue when we said that we have our captive in Labuan. So I can say that Labuan is actually doing a very good job on that. But we also, now we a bit, because we are considered as a small, medium captive. We are not a big captive with all these new accounting regulations and so on. So we are rethinking it to bring to Singapore actually, because my Tan Sri actually has a big market in Singapore. But still, Labuan is at the moment Labuan is the cheapest, so we are enjoying it. But in terms of the local regulations, always change, and this particular country, for example, for Fiji, there's always been a we call coup, army takeover. So it's been 3 times or 4 times army takeover. The Fijian dollar used to be equals to USD. So when I went to Fiji those days, I think 3 years back or 4 years back, I used to enjoy because I get a lot of allowance there and it's equal to USD. But now it's dropped, so 1 Fijian is equal to 2 USD. This all happened due to army takeovers and so on. So we always keep in our mind that in terms of politic issues that we face locally there, and the election is just a corner for both countries. So we actually went and make more covers for power surge and so on. And our coverage all fire based at the moment, and we are planning to do our PCC for crop insurance because we have a big plantations in Papua New Guinea, coffee and tea. So we're planning to do the PCC sell kind of things. So it's all on planning. But in terms of regulation, this is the challenge normally you will face in all the countries, basically.
Thank you, Kiri. Can we run the next poll question? Whilst at the same time, I hear you. You also mentioned that for you, the sell captive in your strategic view is short term. But having said that, when would you then push, for example, from just a sell captive into pure captive? Would that be a strategy as well? And if you move
actually,
into that
we
direction...
started as a pure captive, actually. So we are currently pure captive. We are actually looking at towards to the PCC.
Then you move to PCC?
Yes, then we move to PCC.
So which one then is a bit more long term?
For us, we actually started because my company has been sort of, when these things happen, for us is like, we don't know what to do. It's like we are running without a head and so on, because it took us 2 years when the first fire happened, 2 years to do all these surveys and so on, and we actually say, okay, let's start it with this pure captive first. To do it, go and see what the reaction is, because we need to perform to the reinsurance market in order for them to accept our risk, basically. Because just imagine, you've been having a 5 major claim in 10 years. It's not a big, it's not a small issue. We've been declined so many times. We have actually attended a lot of conference, Singapore conference and so on, tried to convince the reinsurers. Myself, I've actually went to London once, tried to get some Lloyd's broker to convince them. It's all in the paperwork, but never been established. So that's where actually we started with pure captive, and we are now moving to the PCC, actually.
Thank you. So at least we're clear in some directions to some companies. While they start one way, it can end up with the other. And I also hear you saying that you're going to crop captive and all that. So there's going to be formation of other cells. Is that the intention? Okay. Okay, before I go down to Farouk, let's look at this one. Is your organization looking for greater control over their risk and their risk financing? We get 80%. So there's a lot out here who's actually converted to captive and captive options already. And that perhaps may be the way to go. So I will ask Farouk a deeper question, but at this moment, because he's the solutions provider, how does the Malaysian direct market look at, for example, someone starting a captive, and then they coming on and providing the front-end paper? Is there a lot of aversion from the direct market? Are they receiving this and promoting this from your point of view?
Well, the The biggest challenge, of course, for most of the captives is actually getting the support from the insurers as a fronting to their captives. Because like the risk usually that, for example, those that comes to us it's not those conventional lines. It's probably like specialist lines or probably those unadmitted risks, you know, and in order to go to a fronting company, insurance company, you also need to show that what are the potentials of that risk, you know, like will it actually make any profits? The thing is, some of these clients that approach us probably they came up with this insurance captive idea for the first time. Probably they're starting it anew, you know, but they probably do not have actually much experience in regards to their loss profile, so they can only make certain assumptions on the loss profile, and also that the local insurance companies, they need to see the volume. So if you're going to come up with them on a small size insurance premium, it's probably not so interesting for them to take it up, because most so when the client goes to a fronting company, the idea is actually to pass it back to them. But probably they just front about 10% or so, and to sit it back to the insurance to the captive is probably something that don't see it's worthwhile to do it. Moreover, like it seems like a new product to them, and some insurance company would have to go through a product development and so forth. You know, so just to cater for these captive owners to front the risk is going to be quite difficult. So the other option is, of course, you try and get the approval from the regulator. In Malaysia, for example, you try and get approval from Bank Negara, and that process itself also takes some time. And a lot of these captive, actually, they want it fast, they want it quick. You know, they want it within 2 or 3 months. I think, of course, they have really big plans about what they want to do. Usually that will be a halting factor to them. You know, we said, okay, you know, if you really want to do a captive, if this is something that has to be fronted by the local regulations, or if you want to have it to be directly issued by your captive for your risk, it would have to take a bit of time. If it's risk which is you know, probably that doesn't really, where Bank Negara already have given express opinion about that, it doesn't really falls under the purview. I suppose that would be a faster way for them to get the approval. But usually that will be the challenge of them to set up through the regulations through Labuan. I suppose this regulation doesn't only apply to Malaysia, but it also apply to other countries as well. So that's why every time when we want to propose, or when they come over to us for sell solution, you know, we would also usually ask, where's the risk come from? What kind of risk in those countries that you deal with? Do they require fronting or so forth? You know, so these are the things that we need to look at.
In short, the local insurers are not unnecessarily unhappy, right, for them to front a policy?
Yeah, not necessarily unhappy, because like some of the risks is probably something new for the insurers themselves, you know. So some of them say, oh, this is like something that we can't really take it up here. I mean, we have one client, for example, that do actually have the local regulators' approval to go direct to the captive to issue the policy, simply because, you know, they're just not able to get any support from the insurance market.
Okay. There's 2 interesting questions from the floor. And there's one that actually runs parallel to what I wanted to ask. Maybe we'll attempt to deal with that one first. He identified, or he or she just identified herself or himself as DF. As PCC, which is the core, what are your main responsibilities? Maybe I just want to add up a little bit more on that one. Is perhaps the way I wanted to ask is, as a client, how does the client then view the control of their interest in the cell? With that, you answer that question too. And I suppose this is directed to Farouk. Let him take care of this one, and then I'll get back to you on that one. In the meantime, do you mind running the poll question as well, the 3rd one? So would you like to answer that? Maybe, but attempt to tell me, maybe from the client's point of view, on the control of their interest in the cell, which is important to me if I'm going to be doing this, then at the same time, take that question as well.
All right, when the client wants to have when they set up the cell with us, for example, of course, the number one thing they need to do is a proper agreement on how they take control of of the cell. I mean, they could have like a management agreement to how we are actually taking care of the cell on their behalf, because it will be the core's responsibility to make sure that whatever that goes through the cell is within the regulations. Anything that applies on the insurance rules also applies to the captive, when it comes in terms of retention as well. If you don't have funds inside your cell, you can't be retaining most of the risk, or you can't be retaining any risk at all. Usually the program would have to be start off with like the first 3 years at least that you have to seed out your risk totally to the reinsurance market. But because the aim was really actually to try and implement the program. So the control is, they do have auditors as well. They do have internal auditors to look into the control, and they have the brokers as well that looks into the reinsurance placements. So all this arrangement depends. Sometimes if it's the client would say, okay, I'm just going to put my premium into your cell, and you have to manage the cell. Every quarter, you just give me a financial statement, and see how you perform, whether you make profits or not. Whether there's too much expenses incurred through the cell, so whether you need to top up some capital just to meet up your solvency requirement. So they do have to engage people to manage their cells. Yeah.
But it's structured. There's a regulatory requirement that's fixed, right?
Yeah.
So the client actually, with control and all that, can actually sit back, given the circumstances.
Yes,
Okay.
That's right. Yeah.
Very good. So let's have a look at this one. Actually, ladies and gentlemen, we meant this to be like a little bit of a fun type question. And I can see a lot of you saying, what the heck are you talking about? So I don't understand. It actually started at 52. Then the guys realized, oh, maybe they're asking the right question, and I'm not sure what it is. Okay? And it was supposed just to be meant as fun. But at the same time, you also see that in most organizations, risk financing and transfer mechanism is important. And it usually proves useful, but what mechanism to use? But having said that, ignore that one, because I want to launch to the next question with this, and that is to hit a client. No, having said all this, Kiri, is captive really worth the time and effort to implement? The story that you've given, yes, it is. But the reality?
Again, it depends to the group, I think.
Okay.
What the group want to do, how the group looks like.
So let's stop there. That's your group, and perhaps you see a visual group. What about if someone who is actually against this sort of idea? Will it then be worthwhile for someone to consider, given the circumstances, given the geopolitics today? What if China attacks Taiwan tomorrow, for example? Is this really a solution?
Okay, the reason why I say that, not only towards my organization, why I'm saying that, is that by being close to the reinsurers, actually, so you actually basically knows what the underwriter needs, which in a way will help you to determine how your insurance program will be, what your group want to do, basically. So that's the reason I say yes.
Okay. As simple as that, right?
Simple as that.
Okay.
No need to be thinking a lot.
Do you think they are convinced?
I'm not sure about them.
Okay, let's look at the poll questions. Knowing what you know about captive options now, you've heard from Lee Warner's team and a little bit from us. Would your organization consider this strategy? So for Annie and the rest who's selling this captive thing, look at that. 63% say yes, it's something they want to do. Go get their names and sell it. Okay, because I think captive is sexy. Thank you very much for the poll. Maybe go back to the questions, please. You want to take K. Naidu's question, Farouk?
Which one?
The second one. You've sort of answered the first one. Oh, sorry. Did we answer the first question? Did Farouk answer it well enough? Ignore the moderator. He's not supposed to answer that. If he doesn't, we beat him up. Did we answer your question properly just now? We did. Thank you very much. Okay.
Thank you.
You're lucky. Second question.
Okay. in most jurisdictions, Malaysia included, you do require a fronting company, a seeding company for your risk before it goes to your captive. So yeah, that's already stated in the regulations. But again, as I mentioned earlier just now, we always have clients who's more interested in actually placing their risk directly, issue the policy directly from the captive to for their own, where in other words, they don't want to use a fronting company. But it really depends on, as I mentioned, the type of risk, how complex is it, whether there's a market for it locally. So if there is such a kind of risk, you still have to have the local regulators' approval. Depending on how you get approval in Malaysia or maybe in other countries, it may be different. But basically, yes, it is advisable you get an approval for that.
In short, the answer is yes. You actually need an insurer to front it, because as the captive, ideally the law doesn't regulate the captive to issue the paper. The paper must be issued by front-end insurer. So it's simple enough. And then of course, then if yes, then why? So he's given you a bit of the answers why. Then we've also got the next question. But we go to the next question. I think this one, both of the gentlemen can answer. But do you have a story, Kiri? Lee. Lee is the one who's asking this. So Lee wants to know, what really is a horror scenario, if it can happen? I'm sure when you went to or considered, did all the board presentation to start your captive, you would have thought some of these nightmare and horror stories. We don't want you to whisper to Lee, tell everybody now.
Sorry, I'm actually boring people with my story actually today. Always there will be horror scenario when you're doing captive, basically. The biggest fear that we had was that will we able to convince the reinsurance market back to take our risk. That was our horror story. Doing the captive, because the first year was the risk that we took. And at the moment, the layer basis that we all actually reduced with the similar premium. But the first year, we actually have suffered a 25 million USD loss, and we still suffering from it. It took us a quite long time to be on feet again. And if another big claim happen, what will be happen to our captive, basically? Will the captive able to sustain? Will the holding company able to put some fund to just to make sure the claim been paid? So this is all the horror scenario that we thought. So I think this is the standard horror scenario that you will think when you want to do a captive, basically. What will be my advice to the newcomer for captive? Just go with the flow.
Huh?
Because you can't predict anything, actually.
Wait. I have a problem to deal with that. Go with the flow sounds to me like some kind of a dance.
No, operating in third world country, it's always be go with the flow.
Okay.
Because, like what I say, this is a story in PNG. So one of my guys, maintenance guys, actually training the local there. And basically, he was telling to the guy, make sure you paint this wall. And went out. So the idea was he was telling to them to paint the room, actually. But when he came back the next day, that guy only painted that particular wall. And the reason why he painted the particular wall, that guy said, you just show me that. You didn't show me the whole room. So it's something like, doing a captive is something like that. You can't predict it. And again, it will be different portfolio. For my group, it's always been, we've been in shops, shopping complex and so on. Like just now, I heard Petronas, they are more into energy savings. So they have their own risk. They will have their own horror story. For us, a different kind of horror story.
Okay, gotcha.
Can I just add on this one? Lee, thanks for the humor there. The horror scenario would always be there, I think, especially when you have to face with large amount of claims. I mean, of course, the idea of PCC at first is that you always reinsure back all your claims to the reinsurance market. But what if, like, there are certain cells that decide to, oh, okay, I think this is okay, we're going to retain 10%, and suddenly on that year it hits them, or maybe they've forgotten that it has to be placed, or maybe they miss out in the wordings with the reinsurance placements, or even worse, that the reinsurers decide to say that, no, I'm not going to pay it, you did not do anything right, it's what we wanted to. So there was some dispute over your claims rejection. So that's where they start to think that, oh, okay, now you have to think about how you're going to recover your funds into the cells. You probably have to go to a legal suits for that to claim back your claims. So those are the areas that we face actually with regards to management of the claims. Because as I said, that some of these risks are not really those straightforward conventional lines. It may be a bit complicated kind of risk, and even though you think that you have placed it properly to the reinsurance market, but maybe what you understand from what you're placing to them and what the reinsurance market thinks, so it could be some variance in there. Because again, the insureds are not usually insurance people, so they wouldn't really know exactly word by word on what they're signing off for their insurance program. They would really rely on their brokers or their advisors. So these brokers who have placed this arrangements for them must really be on top of these things, the terms that they place for the reinsurance placement. So really the advisors to the captive, people like Halim, for example, I'm sure would give you a good advice on where to place your reinsurance and all that. Yeah.
I would say talk to Roy Sharma. Thank you, Farouk. But having said that, we'll take care of this one. I know I may have opened my mouth too much by saying sexy, so both of you have got to answer this. And I think these questions can be answered by both. Whilst Kiri attempts to say how sexy it is from his point of view, as an operator as well as a user, then Farouk will also come on from the solutions point of view. I would like you guys to run the next poll question as well. Could Kiri tell us what, in your opinion, you think is sexy about this? Is it the sari or is it the dress? Which part of it?
Sorry, is this question coming from this floor or? Oh, sexy. I also don't know how to answer this. Okay.
No, perhaps look at it from this point of view. Because if you ask a common insurer, and you've got a risk which is slightly different from what is their template, where they usually have a manuscript or their own template, here you want to write a risk which is outside that template. Balian almost went down this route in difference in conditions policy and all that. I think those things are sexy. So you're really looking at something that's not necessarily conventional in approach, modern in approach, which perhaps a captive can do. So to me, that could be sexy. But that's my view. But as a user, how can you make it more sexy? Forget about the Bhangra and the Bollywood dance and all that stuff.
Honestly, I don't know whether I'm giving
okay,
a right
then
answer or not.
we get Farouk to answer it.
Well, I think it's the simplicity and the effectiveness of the cell captive. Because as I always believe that, it can be small without office. We just give you a desk. You probably don't even have a desk. You just pay up your premium, but at the back end that you have this captive running for you. It runs like a real captive company. It's just that it's not a real company. It's just a cell. You have the rights to the profits of the cell, whatever your cell makes. But you are also subject to the losses. But again, if you have your reinsurance program in place, very well covered, you wouldn't really face that. So, well, if you talk about sexiness in terms of this insurance program, I would say just that it's a simple and faster way of setting up captives.
Look at it from this point of view, perhaps my view. Where I grew up, everything was structured. We all start with fundamentals, growing up the business, don't talk about valuation play and everything else. Today, the boys and girls out there have got a startup mentality. With a startup mentality, what happens today? Our children don't go to universities anymore because the universities give you education of the past. The kids today want education of the future. So I think the insurance industry has got to go around that route too. Do we then stay conventional? Do we just do this stuff in a structured manner? Of course, we got no choice because it's a regulatory requirement as you're dealing with people's money, and this money has got to have technical reserves to make sure that it's available when you're required. But having said that, you would want a nimble organization, perhaps like a captive, or a PCC that can challenge the conventional insurers and say, let's do these things different. Let's think like a startup mentality. Let's just do this without any sentiments. Run with this portfolio for 3 years, find it completely successful, sell it, move on to bigger stuff. I think that's where the market is heading. So talk about long-tail business. Does captive want to do liabilities in the future? It may be difficult because then if you want to sell the business in 3 years, you can't do long-tail business. So this creativity, these ideas, this continuous promotion of new things, I think is sexy. Because otherwise, you remain the man you are. 5:30, you go home. 6 o'clock, you play around with your children. 7:30, you have dinner. Then lights out. What you do next, we don't know, given your circumstances and your age. But if you have got a lot more time to think of what you want to do with a startup mentality, then perhaps by the time you hit home at 8 o'clock, that meter may go somewhere else because you're now energized, thinking about something new. Roy, does it appeal to you? Something like that? Yeah, go with the flow. I like that. So perhaps from my view, without having to get technical with it, is I think time has come for us. I don't like to use the word aggressive before, but I think now this market has got to be aggressive. Otherwise, we're not relevant anymore. Otherwise, we remain conventional. Otherwise, we write the same risk. Your banks are going to go against you because these guys are stepping into this as well by taking away corporate capital, by putting corporate capital where they think the corporate capital can be collateralized better. And I think they're also stepping into this route at some point in time in future if they want to be a startup. So hence, time has come for us to be able to think outside the box, okay? Now, having said that, I like this as well. So guys, there's a lot of you out there who thinks that I think captive is the right option to go. Are there impediments you foresee which could make captive option challenging? And you say yes, but surmountable. So 67% says that it's surmountable, and therefore that route could be a good route. So I think for all captive, despite being nimble, despite having the regulatory requirements to fit you, because if you want to change regulation with Bank Negara, with LOFSA, in the conventional market, you've got a strict challenge because they've got 300-400 years of cases, regulatory requirements all over the world which has been strict. But I think for the captive market, there's a lot of potential possibilities that you can tweak it that will benefit the client. Because at the end of the day, I think Bank Negara must see this very clearly as well. What is it that people want to buy to protect themselves? We cannot be buying the same paper from the same insurer who's only protecting me and allowing these gaps not to be looked at. So in that, I think that's important. So with that, is there any other questions? No more questions. Then, Farouk, there's this burning sensation in you that I think you want to promote. Yeah. So without having to promote your company, promote captive. To me, PCC brings it down to a simpler format, for example. Is that really why people should go into PCC? Or shouldn't then people just consider the captive option? So really the advantages and disadvantages must be made clear to everyone, for example. I think the Lee's group started it off very well. They interfered with what we did as well in PCC. So we give ourselves a chance now to interfere where they were, for example.
Yeah, I mean, apart from the simplicity in setting it up, the small capitalization, it also caters for your wildest imagination, what kind of risk that you want to go through into your captive. You know, because, I mean, as I said, that I've gone through quite a number of experience myself in trying to meet what the clients want for their captives, you know. So it really brings you to, you know, to have a further analytical kind of perspective from what risks these are. You need to do a bit of study on this kind of risk, you know, and also it's all like a learning of a new risk that you can apply to yourself, to your subordinates, you know, to the client, you know, or even to the regulators when you approach them, you know. So yeah, I mean, that's where I feel that it's it's an exciting way of looking into captives. It's not going through the conventional lines, but it's really about the other lines of business.
Fantastic. We got 4 minutes to go. So with that, I'd like to do this. Give Kiri perhaps 1 or 2 minutes just to tell you guys, from his point of view as a user, as a captive operator, and perhaps something else in the future, what then is his key takeaway for today. Then we give another 2 minutes to Farouk to be able to give his key takeaway as well. And then we disappear from and fade into the sunset shortly. Okay. Kiri, would you like to give us your key takeaways? And then we're out of here.
Okay, for me, my key takeaway is our success story, which is our captive, basically. So when we started, we actually look up to Genting Group, Petronas.
Yes.
Where I think they are the founder of captive, essentially. So, and we actually been guided well by our captive manager, Mr. Wong.
And who's this Mr. Wong? Your captive manager?
Our Labuan Insurance Management
okay.
is our captive manager, Mr. Wong Gimtek.
Thank you, gentlemen.
So it was very challenging for us, actually. Like what I say, captives really works, but basically it's up to the particular group what they wanted from captive, actually.
Stop there for a minute. So if there's no captive, what would you then do? Sell saris?
Honestly, if no captive, I won't be working in this group.
Okay.
I was hired for captive purpose.
So, okay, we attracted one foreign talent into it.
So, yeah, that's what will be my takeaway. Like for me, I will encourage everyone to try captive. Maybe at first you won't see a lot of savings, but trust me, along the year, there will be a lot of benefits. You will get to know your reinsurers well, you will manage your risk well, and you will be up to date in terms of your rate, and so on.
Look at Balian and ask him whether he agrees or not.
I'm not sure, because that's a 25 years success story, I think. Yeah. For us, it's like what I say, like a teenager. Yeah. This is just my captive is just a teenager.
Okay, wonderful. Thank you. Thank you. Farouk, your 2 minutes, your last shot at sunshine.
Well, if you have, just open up the idea of captives to your clients, to your business channels. You know, like Labuan is really a place that you can really look into a lot of insurance solutions, captive solutions. I mean, like I've been in Labuan for 20 years. That's more than half of my working life. You know, and it actually really builds up your career. And you know, I ended up in Labuan. I didn't actually have any ambition of being a captive advisor when I was in school. You know.
But you found a girl there, didn't you?
Did I?
Okay.
Perhaps 1 or 2.
You found 2. Sorry, guys.
Well, okay. The thing is, yeah. I mean, it's a. Of course, when people who have approached me, I mean, a lot of people say that captive is a new concept in insurance. I think if the more of us are talking about it, especially from a conference like this, you know, raise the awareness about it. Because I think in the other countries, like in the US, for example, I think the captive idea is much more receptive than it is here. You know, I think it's as what we've gone through also earlier on about the insurance versus the captive, where the captive is actually, you know, are they the competitors? There could be competitors, but if you are going into other lines of business that the insurance cannot cater for, then you're actually complementing the economy, the business that have in your country. So yeah, I mean, talk to us, talk to the professionals, talk to the insurance managers in Labuan. We would know how to talk about the captive.
Thank you very much. Ladies and gentlemen, that has been worthwhile, I hope. We've occupied your 1 hour with the right issues that we wanted to talk about, gave you clarity in some of the things that PCC can do and captive can do, and perhaps offer some nimble solutions as well. With that, I hope we've satisfied your burning desire to want to know more. And I would like to take this opportunity to thank both my illustrious panelists who's given their all. They were not very happy to share horror stories, but I think the reality is captives should still and will remain sexy for a long time. Thank you very much, ladies and gentlemen.
Thank you.